Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you the end of the week update here it is Friday as the recording of this video, and we had purchased a new stock, increased the position. So we'll update the dividend tracker to give you end of the week updates, update you guys on the spreadsheet, which we did earlier this week, but obviously there's a new value, so we always want to give you that update. And then we'll just pretty much end it on a good note. And so if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So we'll get right into it here. And once it loads, we will go for the day. So the portfolio at the end of the week closed out at $7,240.42. We are up $1.41 today, up 0.02%. For the 1 week, we're up $67.64, up 0.94%. For the 1 month, we are down $174.32, down 2.35%. For 3 months, we're up $65.42, up 0.91%. And for the 1 year, we're up $988.14, up 15.80%. And for the all, we are up $1,006.24, up 16.14%. So as we go through the portfolio here, the position we increased today was actually Royal Bank of Canada. As usual, this is as the week, as the month. For the month, we are purchasing Royal Bank of Canada. So today it closed out at $128.41, up 53 cents on the day, up 0.41%. We currently now have 11 shares, and we have a total position value of $1,412.51. Average price of getting in is $116.94. And percentage of the portfolio, it holds 19.53%. Yes, I'm going to get heck for this because it's not really balanced. I'm not one to go so heavy in one position. So we'll talk about that near the end of the video. Today's return on this position was $5.09, up 0.36%. And since starting the position, we've had a total return of $126.12, up 9.80%. For those that don't know what Royal Bank of Canada is, or ticker symbol RY, this is a Canadian financial bank, one of the top five, one of the big five they call it, but it is the largest by market cap in the financial sector in Canada. So the market cap on this one is, if I can find it, $182 billion. PE sits at a modest 12.03, and the yield currently today is 3.38%. So as for today, and again, if you haven't earned a free stock, there is a link below for the referral where we'll both get free stocks to grow our portfolios. The free stock is not the actual stock. You just get the value of that stock. So let's say you get an Amazon stock, that's $3,400 in your pocket, or an Alphabet stock, aka Google. I think that's like a $2,500 stock, but you get the dollar value, and then you can use that to buy the stock if you wish, or buy other stocks that you may want. Okay, so today we did purchase 1 share of Royal Bank of Canada at 9:03 a.m. this morning. We bought 1 share at $128.62 as a total cost on the Canadian side. So what we'll do is head over to trackyourdividends.com. And as you can see here, last week the portfolio was valued at $7,083, and that is without the cash account. We are up $1,185 in this portfolio. Dividend yield as of today, if you build this portfolio as per usual, would sit at 3.4%. Our yield on cost is about 4.08% as we use the strategy of dollar cost averaging, whether the price is high or low. And annual income comes in at $240. So if we head down to Royal Bank of Canada, as you can see here, we have 10 shares from last week. Closing price today was $128.41. 53 cents as of today was the change, or 0.41%. Our average cost of getting in last week was $115.78, and our profit on this one is $126.30. Dividend yield today is 3.36%. Our yield is 3.73%. and we have an annual income of $43.20. So what we'll do is go ahead and update that position, and we will enter the ticker symbol as Royal Bank of Canada, not the American one. This is a Canadian company, so it is on the Toronto Stock Exchange. So usually with Toronto stocks or Canadian stocks, they will have the abbreviation TO, which I do believe stands for Toronto. So we have one share here, and our cost was $128.62. And we'll go ahead and add that to the portfolio. And boom, it's added there. So yield now still, don't know why I clicked a question mark. Yield is 3.39%. Yield on cost is 4.06. Annual income of $245. Portfolio closing out at $7,212 without the cash account, and we're up $1,185. If we head down here, we now have 11 shares. Average cost went up from $115 to $116.95, a profit of $126.06. Yield is 3.36% again, and our yield on cost is 3.69%, and our annual income has increased to $47.52. As you can see here are the dividends for the expected. So this October 2021, we will receive around $29, and then November $20, and it goes down to December at $9. And you can see it's the same trend because these companies pay on a quarterly basis. Now we'll head to our diversification here. As you can see here, because we are heavy in the financial sector, we have 54.7% in the financial sector. Royal Bank is right here, which is our biggest financial sector position in the financial sector. We have all these other ones, so you can take a look. Consumer staple is 7.5%. Telecommunications 16%, and technology sits at 21%, which just includes 2 positions. And so that is the portfolio on trackyourdividends.com. It is completely free to sign up for Track Your Dividends, and it's always good to see how everything is tracking. So as you can see here, since starting the portfolio, the only one that's under about $10 is Loblaws, and we've had a very nice return on this one here. And so we will head back to the screen here, go back to the actual portfolio. We have $6.68 in the cash account, and that is the portfolio. And we will talk about the spreadsheet. So if we pop it up on the screen here. So this year in 2021, we've so far received dividends of $8.20 for the month of October, totaling $136.73 for the year in dividend payments. Our year-over-year growth from the dividends is 687%, using $17.37 as a baseline from last year, not being a full year. Total invested since starting the portfolio is $6,234.18, and a market value today is $7,240.42, which gives us a performance of the year 3.3%. This year, net deposits are $4,364.18, and that it also includes referrals. So that is the spreadsheet, guys. And so one of the things I want to talk about is the allocation. So obviously we know that Royal Bank of Canada holds about almost 20% of the portfolio, and we're going to change that moving into next month and so on and so forth. By the end of the year, hopefully we can balance the portfolio where none of these positions are taking more than about 10% of the portfolio, because there's 10 positions in here. I want to keep it as equal as possible. There is no specific strategy to that. I just don't feel comfortable. Well, you know what? No, I am comfortable with Royal Bank, but I just want to make sure that consistently on a month-to-month basis, there is a 10%, typically nothing goes over 10% in allocation, in diversification as well. And so we will make that change come November and December. We'll try and increase positions. And this does not mean sell my positions and reallocate those funds into another position. I am all about hashtag hodl, however you want to say it, this new way to say hold. And I'm not going to sell my positions. I'm just going to increase the positions that have such a small position, regardless of the price, and just try to balance it out for the new year, and so we can have a fresh start. The other thing I want to talk about is clearly the performance for this year is 3.3%. We were doing fine near like before this month, before September, we were almost at a 10% return for the year. But obviously that changed. And I want people to understand that this is where index funds come into play. I know the S&P 500 right now. So if you're indexing into the S&P 500, you're looking at anywhere for this year close to a 20% return. Last time I checked, the index I'm in outside of this is sitting at about 19 point something percent, and that's phenomenal. And so if you're not about building a dividend portfolio, you're not looking for that income, because usually that's what people do when they build dividend portfolios. They're looking for that income when it comes to retiring, when they come to not working anymore, not having active income, and really need that passive income. That's what a dividend portfolio is essentially for. You will get the market appreciation in some positions, but we are mostly looking for those dividend payments that pay on a consistent basis and are stable. And so if you're looking for growth, this is where the index funds come into play. And it's either the S&P 500 or the NASDAQ or certain ETFs that mimic certain sectors. And I know there's a lot out there. And so you really have to use your own discretionary when it comes to finding the ones that suit you, suit your goals, suit your knowledge around the market, and really what you're trying to achieve. So just take that into consideration, because the index did outbeat us in the dividend portfolio, as it should, because I'm not a genius at this, and not everyone is, but indexing is probably one of the best ways to invest if you're looking for just passively investing. We're building this portfolio just to build a dividend portfolio, to have the income for when we need it, but really we don't need it. So we'll just keep on reinvesting those dividends. And so that is pretty much it for the video, guys. If you guys did enjoy the video, don't forget to hit the like button, subscribe, turn your bell notifications on. They are completely optional, but completely free. And it does help us get the exposure out there and really help those that maybe are just starting out to invest. And again, this is not financial advice. I'm just the guy on YouTube building a dividend portfolio right in front of your eyes. So have a great week. Have a great weekend. Enjoy the long weekend. Enjoy Thanksgiving. And we'll see you in the next one. Bye.